It's the antithesis of the huge negative that happened on November 6th, 2021, the exact peak of the Bitcoin previous cycle. Why was that the exact peak? Because they didn't approve a spot ETF, which would increase demand for actual Bitcoin. They approved a futures ETF. Now, why is that important? Because that allows the banks to go naked short.
Mark Yusko, the founder, managing director, and CIO of Morgan Creek Capital Investments, recently engaged in an interview on the Lark Davis channel. During this conversation, he emphasized the significance of BlackRock's application for a Bitcoin spot ETF. Yusko discussed how the momentum of Bitcoin's peak in 2021 was curtailed prematurely when the approval of a futures Bitcoin ETF took precedence over a spot ETF that would offer direct access to the cryptocurrency. He attributed this decision to what he perceives as regulators favoring financial institutions. Drawing parallels, Yusko likened this to the timeline leading to the approval of a spot gold ETF, which only came after major financial players manipulated the futures market. Yusko anticipates a similar unfolding of events for Bitcoin, pointing out that the SEC had consistently rejected spot Bitcoin ETF applications for over a decade. Nevertheless, he and others, including Yusko himself, are confident that BlackRock's application will gain approval from the financial regulator. He goes on to predict that not only will the BlackRock application sail through without obstacles, but it could be approved ahead of other previously submitted applications. Regardless of the timing of the approval, Yusko underscores its potential bullish impact on Bitcoin. Drawing a comparison to gold's trajectory, he explains how the precious metal's price remained stagnant until the eventual approval of a spot ETF.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
It's the antithesis of the huge negative that happened on November 6th, 2021, the exact peak of the Bitcoin previous cycle. Why was that the exact peak? Because they didn't approve a spot ETF, which would increase demand for actual Bitcoin. They approved a futures ETF. Now, why is that important? Because that allows the banks to go naked short. In every commodity in history, oil, gold, silver, wheat, anything in history, when there's just a commodity market, like the good old days of oil. I produce oil, you need oil to power your machines. If I want to sell you oil, Lark, I actually have to have the oil to deliver to you. I have to put it on a tanker truck and send it to you. Oh, no. The CBOE came along. I'm sorry, the COB, the BOT, Board of Trade, CBOT, Chicago Board of Trade came along and said, no, we have these cool things called futures contracts. So Mark, you just promise to get some oil to sell to Lark in the future. But if we settle up before the actual date, I never have to get the physical commodity. So there's no increased demand for the commodity. There's only an increase for paper. And so what happens is the paper goes up and the physical supply stays the same. Well, that's bad for price because there's more supply, so the price falls. And so we saw this with gold. The gold ETF would not be approved. And despite all the evidence that the economy was rocking and the baby boomers were buying stuff, gold was stuck at $400. It was just stuck at $400. This unlocks a $30 trillion market, right? $30 trillion of RIAs and brokerage firms that have been reticent to approve anything on their platform. An ETF, they're going to have to. So $30 trillion. Let's get 1/10 of 1%. 30 billion. Well, 30 billion on 600 billion, that's not much, Mark. That won't do anything. 600 billion. It ain't 600 billion. The free float is more like 100, 150, 30 on 150. That'll move the needle. And if we get 1% instead of 10 basis points, it's 300 billion. 300 billion on 150. That's a big ass number. Look, supply and demand is really simple. Microeconomics 101, really simple. When demand goes up and supply is fixed, and I will argue supply is actually inversely proportional to price because people get more convinced that they want to hodl forever as the price rises. and they don't panic. So as the price goes back to 50 or 60, I think there'll be less free float, not more. I don't think there's a lot of people out there that are going to be selling. I think what you see with the daily selling is just the same people buying and selling over and over. It's the bots and the high frequency traders and Ken Griffin.
In his discussion with Davis, Yusko responds to Cathie Wood's bold Bitcoin price prediction of $1.5 million. While he acknowledges that her forecast may carry some degree of exaggeration, he emphasizes that this doesn't diminish Bitcoin's role as a prominent digital asset and a compelling alternative to gold. Yusko underscores that these very qualities are what prompt politicians, regulators, and policymakers to exhibit strong opposition towards Bitcoin, as well as the broader cryptocurrency sector. Now, let's return to the ongoing interview.
Bitcoin's different. Bitcoin is better technology for money. And the base layer of money is a very, very valuable asset, right? The value of gold today is about closing in on 6 trillion. So that's a 10x from here for Bitcoin. But then Murray says, well, yeah, but that's just the base layer of money. All the other crap we have, the currency is bad. It needs to be replaced with good. And the reverse Gresham's law, good money will crowd out bad. Total global money supply is 86 trillion. That's a big, big number. Now, look, I agree with him in theory, but in practice, the governments are going to fight really, really hard to maintain control of their honeypot. And they really, like, our government officials, all 538 of them, love the fact that they can own parts of companies that they vote to give money to Ukraine that ends up at companies that they own, that manufacture stuff to go shoot off in this war. That's an awesome gig. They ain't giving that up. Governments aren't going to give that up. They're not going to give up their fiat. So I'm more like gold, dodo bird, Bitcoin replaces that base layer of money, but it's in every central bank. It's at the base layer of all fiat on top of it. That's a good asset. And that asset is more and more valuable because we don't price it in Bitcoin. We price it in fiat. And as that fiat continues to, look, when I was growing up, I ask people this all the time, and you're too young, but I ask people, what was the lowest price you remember for a gallon of gas? Mine is 33 cents. I remember it like it was yesterday. At Totem Lake in Kirkland, Washington, 33 cents, got my, learning to drive. And I put gas in my car the other day and it was, $4. It's the same gallon of gas. It didn't get better. It doesn't do anything. In fact, it's less good because there's ethanol in it now. So it's not quite as good, but let's take that off the table. It's the same gallon of gas. It's not that the gas got better. It's the money got worse. And so candy bar, right? A Twix was $0.25. Now it's like $2, or a Coke, $4.50. So that's not things getting better. That's the money getting worse. And so Bitcoin from 2020, right? Bitcoin's like $10,000. And they doubled the money supply in the United States. This is crazy. This is crazy stuff. 247 years as a republic, right? We're a republic, not a democracy. We're a republic. So 247 years, and a democratic republic, but we're a republic. And 244 of those years, we created half the money. And then in 2 years, we created the second half. So what should have Bitcoin done? It should have doubled. Kind of did that. And now it's gone up a little more because the Fed bailed out SVB and all these other things and increased the money supply again. It was like, oh, they're tightening. They tightened interest rates, but look what they did with their balance sheet. It's going back up again. And so it's not a surprise that Bitcoin's up almost 100% this year because the money supply is increasing. And that's all the price of Bitcoin is. It's a reflection of the quality of the currency in which you denominate it. So if you denominate it in yen or euro or dollars or bolivars, they go down, it goes up. Great.
Regarding the matter of spot Bitcoin ETFs, Grayscale Investments, the entity behind the Grayscale Bitcoin Trust, has called upon the SEC to uphold fairness in its decisions. In a recent statement, Grayscale advocated for equitable treatment of all applicants, suggesting that if the SEC were to approve any proposals for spot Bitcoin ETFs, it should do so for all simultaneously. The investment management company contends that granting approval selectively could establish an uneven advantage for certain applicants, potentially leading to an unfair first-mover advantage. Grayscale, much like Yusko, raises concerns about potential favoritism towards Wall Street giants like BlackRock, ARK Invest, Valkyrie, and VanEck. Do you anticipate such a scenario unfolding? Share your thoughts on this topic, and also feel free to offer your insights on Yusko's interview by leaving your comments in the section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.